All right, it's March 6th, Friday afternoon. I thought I'd do a recap for today. I definitely need a recap. I need to talk through this. I need traders to understand what could happen when things go wrong, when you're shorting the hottest stock on the market, how you can lose focus, how you can just stay so stubborn, how you can make a really bad mistake, and luckily, how you can get out of that. Now, I can't teach that. That just so happened was I escaped today, but I can't do this every day. So I'll go through this and show you. So only 3 trades on the day: TVIX, Carnival Cruise Lines, and INO, right? So we'll get to INO in a second. Real quick on TVIX. I mean, I dabbled 25 shares in the morning. I said I'd give it to $100. Sure enough, it goes up $4. I'm out. And I don't touch it the rest of the day. Even here, unfortunately, missed the awesome fade in the afternoon, and we'll find out why here in a second. Carnival Cruise Lines, everything was jumping in the morning, and I was so focused on INO, I really didn't get the pop on here because I was watching Carnival, American Airlines, some gaming stocks. Could have popped into all of them, 500 shares, and rode $1.50 on most of them while the market was moving back up. And so I missed these opportunities here. I actually shorted just a tad when news came out that the government was going to try to see how they could limit people from taking cruises to limit the spread of the coronavirus. But I didn't stay in it too long. I mean, quick 100 shares, $30. I moved on because my entire day was focused on INO. Let me maximize this for you here for a second. And so let me take you through what happened. So in pre-market, I started dabbling. I only did maybe, I think it was like a couple hundred shares or so. And then I covered right away. And then we open up at the market. We spike up. I only get in about 2,500 shares. I cover. I add back in. I come down here and I cover 300 shares out of, I think I had maybe 2,500 shares. And I'm thinking we're going to get the rest of the flush and I'll finish off the rest. But at this point on my entire position, I was up about $4,000. And so then we start grinding. We pop through here. We see these volume bars here. Well, I see them now, but I wasn't really focused in on them. I was focused in on where's my fade? Where's my big $6,000, $7,000 gain on a Friday afternoon? So I add back my covers, a few hundred shares. We come up, we test this again. My average is about 1270 right now, so I'm patient, right? My average is still 1270, so I add back more. And then this is where it all goes downhill from here. So this million share candle should have been my awareness that this is basically going to start squeezing, that this is a trap. And I should have exited the position for basically flat, but instead, as you can see, I add. So I'm borrowing shares left and right and adding to the position thinking, okay, I'm getting the last squeeze of the day, the break of the high of days, but eventually we'll crack down. And for a second, I was right. We get down here and we test about 1280. My average here on 10,000 shares is about 1315. So I look and I'm up $2,000. I'm like, great. All we need to do is fade right back. Nope. Another opportunity to get out lost. I put like my last borrows on, so I'm in 10,800 shares. We fade here. My average right now is about 1316, and then the squeeze happens. And, I'll tell you something I should have did, and I didn't even realize it until about over here. But I should have done it. I wish I did. But anyway, we get the squeeze. You might be asking, what in the world are you doing? You broke high of days. You faded back. You could have gotten out. Yes, I know I could have gotten out. You break high of days again, and then the squeeze is on. And so we get to $16 a share. Mind you, my average is $13, $16 a share. So I'm down $30,672. I wrote that down just to make sure I'd remember that and never forget it. Obviously, as you can see, these are my, these red dots are my shorts. These green dots are my covers. Red, 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 red. there's no green. What am I doing here? Waiting for this fade. Sitting through this is not fun. I can tell you, being down 30 grand is not fun. I don't trade to be down 30 grand and then go for the ride. I can go to, Vegas and get better thrill for $30,000. So let me just tell you, sitting through this is rough. At this point, if you're short like I was, you have no idea if this is going to go to 18 and then, finish the day on the highs, and your broker is calling you, the risk office is calling you, we're liquidating your positions, you owe us money. That's the potential. And so I'm sitting through this, and I'm anticipating that this can't go on much longer because we've got million share candles coming up. We start the crack, okay? It's taken me a lot of years to even be in a position to control my emotions, not freak out, be calm, stay focused, still anticipate what I'm expecting. Okay, so this wasn't, I guess you can call it luck, but there's some anticipation, okay? There's some expectation here. And so I'm waiting. Okay, so we test 1350s. Mind you, my average is 1316. We come back. We test again. I want to start covering because the worst thing that can happen is going into the close and this squeezing and, gapping up for Monday. Again, it's a Friday. I don't want to hold, $150,000 of this particular stock over the weekend. And so what happens? Well, I don't get the crack that I was looking for, so we go into the post-market. And so I'm still watching this like a hawk, right? Post-market comes, we start that fade, and I tell you what, as you can see here, again, my average, well, let me go back. I covered 1,300 shares right here, right? Took a loss. I'm down $1,300 on the day overall because I was up I was up a little bit on that cover from earlier. So I'm down 1,300 from being down 30,000. I'll take it, right? But then we start getting this fade. My average now on the last 9,500 shares is 1,324. As you can see, I'm covering like crazy. We get one final push down to 1280s, but that was just a quick snap. I mean, I saw 1285 on level 2, but I already had my orders at 13, and I was just firing away 2,000 share lots like crazy until I was completely filled, finished the last one at 1,000. And then obviously here we are at 6:46 p.m. Eastern time, Friday, March 6th, and that was it. So if you're me, that was your last chance. That was my last chance to get out. Who knows what happens? We probably close mid-14s. We could have a small gap up and another squeeze out Monday, and then, the fail happens. But, will I have an opportunity Monday? Well, yeah, I have an opportunity Monday if this gaps up, 15 goes to 16, 17, 18. Probably will be more patient, but I can live to trade another day. And this is just goes to tell you, shorting, you can't mess around with this stuff. You can't be early. Nailed it right here. Should have gotten out, probably flipped and went long. And so let me tell you what I felt like I realized right around here what I should have did in this area. And what I should have did here when I had my average at around 1315 and we cracked over and I said, you know what, I'm going to keep this, is I should have went long 10,000 shares in my other account. Now I could afford to do that, 10,000 additional shares long while I'm holding 10,000 short in this account. I'm basically boxing the position. So now no matter what happens, I'm going to be constantly break even, right? We go up $2, I'm down 20 grand in one account, up 20 grand in the other. And why would I do that? Well, I would do that because what's the worst case scenario? This never looks back, but I make all that money along the way. So I never really lose money. What really is the goal is that eventually we do get here, we peak out, we get this crack, and I see that we're starting to fade, and I lock in the long position. Lock in the long position for about $30,000 here, honestly, is what would have happened. Maybe 20, 25,000. And then I get down here, and now I'm focused on the short position, letting it fade, right? Comes back up. I'm still up on the position, up in one account, down in another. And then I could sit patiently through all this versus on the trigger finger, not knowing what could happen. And so that's the idea of boxing the position. It's what I should have did. I'll remember that for next time. Only reason why I didn't think about it was because I just set up that other account with the same broker. And so it's just something that you have to keep in mind. But yeah, 30,000 down to $380 gain. Now 310 after it's all said and done, borrows, commissions, I'm probably down $20, $25. But again, from 30,000. Now, the worst part of it is not even that. I mean, it is, but what's even worse is that when you're stuck in something like that, and that's all you're glued to, and that's all you're stuck on, as opposed to, maybe having gotten out, dabbled a little bit, maybe really went in big here, covered some, added again, covered a little bit, but, no more than 2,000, 3,000 shares, what my account can support, not going into margin, those kinds of things, gives me enough room to have mind clarity and mind space to witness this opportunity, right? I'll line these up here where we get the reversal at the end of the day like we did last Friday. Shorting something TVIX, couple hundred shares, 300 shares max, I'm getting $20, $30 a share on there to end the day. And I can't do that because I'm totally focused on one position that's really grinding me. And so that's what you've got to do. Too much size was mistake number one. Not getting out when I should have number two. Deciding to stay in, but then not boxing the position if I'm going to stay in. Getting in too early. So many things wrong. But I'm going into the weekend completely in cash from 30,000 potentially down, blowing up this particular account to, living to trade another day in this account and just moving on. Lesson learned. But I wanted to share that because I don't want this to happen to anyone, especially if you're new, if you're just getting started, if you've never shorted before, or if you've got all your life savings in an account. I've been doing this for years. I don't want to do this. I can afford to, but I don't want to. Okay? So this is more of a lesson learned. This is not even bragging rights. This is a terrible, terrible trade. Stupid trade. Have I done this before? Yeah. Has it bit me in the butt? Sure has. I've paid the price in the past, obviously. I thought those days were behind me, but obviously every so often, no matter how long you've been trading, no matter how, decent your gains have been in the recent past, this market is volatile. What you think can happen and what you call rational doesn't always happen. And so that's the biggest lesson, is to just either not trade at all or trade tiny size or box your position or cover on those flushes like I didn't do and just take your money and run. Don't marry the stock. Don't become attached to it. It's Friday. The market's going crazy. Coronavirus everywhere. You just got to stay on the sidelines sometimes and not get too crazy. Here I am trying to go for home runs. Maybe I'll hit one here in the next couple of weeks because every opportunity to trade like this, as bad as it is a learning experience that I've got to take to heart. I've got to reset. I've got to refocus. Hopefully you picked up something from here, learned something. Leave a question in the comments. I'll respond. If you've got any feedback, if you want to tell me I was stupid, you want to tell me what you made on it, great. Congratulations. I mean, I totally screwed it up. But, next time, hopefully my next update will be a really good one where I really nailed it and I did all the things that I should have did this time and that I'm talking about now, so you can see, when you follow the rules, when you follow what you learn from, things can really turn out well. Thanks. Have a great weekend.